All right, hey there, good morning, everybody. Christopher Franks with Texas West Capital. Made it through another week, another weekend, and back to another week. It is Monday, the 14th of December, 2020, in San Antonio, Texas. Another beautiful day outside, a little bit cool, but I'm sure a lot of y'all are a lot colder than we are at the moment, so there is that. Hopefully y'all are doing well. Hey there, LG, good to see you. Nevlusian's here. Hank, what's up? Jamma Gaming TV. Hey, good to have you here. Or is that Jams? Gaming Jams. Okay, yeah, my eyesight is just... Don't get old, it's a trap, guys. Hey there, LG. Talking about Assange pardoning, Dominion voting systems being highly disputed. Should be an interesting next month or so. I think it'll get interesting even beyond that. The country's pretty divided right now, social unrest. There's just not a lot of positive going on in terms of everybody's emotions right now. Even those that are getting what they want, say in a Biden presidency, still very divided against those on the other side. So I think there's, again, guys, macro reverses take a while. I thought it might happen a little bit earlier, didn't, but that doesn't mean it doesn't happen. There's a lot of disconnect going on between the way people feel and what's going on in the economy and the markets and everything. I see a lot of very amateur traders making ridiculous comments and remarks, not just on some of the stuff I say, but I see it all over Twitter and whatnot, because they don't understand. And here's the problem, guys. When you come out thinking you're smart, when you've been doing a thing for a very short period of time, usually it's the way you lose your money. Usually that's the way you have your rear end handed to you, and you want to be careful with that. If somebody has been doing a thing for many, many years and they're still doing it, odds are they've got a better grasp on what's going on overall than what you do. That's just in general, no matter what you're looking at in life. So always keep that in mind. I say this because, like politics, it seems like, trading tends to make people believe that they know more than they do when they're first starting out. And so, if there's one thing that I'm trying to help you guys do here day in and day out, it's to recognize that you don't know what you think you know at the beginnings. You just don't, guys. It's part of being a new trader. And the sooner you can humble yourself and accept that and seek to learn rather than seek to, for some people to be a complete rear end online. But for others, even just to try and sound smart, I don't know. Again, guys, I think social media has really done a lot of negative for people who otherwise might be all right with things, with trading and whatnot. If you're left to your own devices, you don't have anybody else to show off to, you tend to listen more. If there's an opportunity for you to look like you know what you're talking about and whatnot, people tend to take it. They want that peer acceptance. But that doesn't do anything to help you out as a trader. So just be careful with that out there. Let me see here. LXT, what's going on, man? Data says the easiest person to fool is yourself. That's right. That's exactly right. And it's one of the biggest traps that new traders fall into. Again, I've said this so many times before, especially when we're new to trading, we tend to give ourselves more credit than what we deserve, and we tend to ignore the things that we do wrong that we should be paying attention to. We minimize, we downplay those bad things we do, those mistakes we make, and we over celebrate the few times we make a good decision or a good win. And that just really, again, distorts risk on you when you're trading. So be careful of that. Hey there, Baker Trades, good to see, man. Telluride checking in as well. Train Crypto, what's up? Let me see here. Jams Gaming, you're getting your first prescription for your eyes this week so you can understand. Yeah, I'll tell you what, man. And sometimes it's tough, because I've just got this large, curved screen here. And so the text box that I'm reading, is all the way over to the other side of the screen. So it makes it even worse trying to read way out over there. I appreciate your understanding, though. Let me see here. Just in time. What's up, buddy? He says, if you're not humble, the market will fix it for you. It will. Hey there, Spiral Architects, Sir Hold checking in. Onyx King here. Let me see here. Yeah, man, I've seen a lot of you guys over there over there in Europe, going into some super strong lockdowns, right? I didn't get to see who it was, but it looks like Onyx King saying Netherlands, Germany. Gosh, it's gonna be crazy stuff, right? Mehmet, what's going on? Learning a lot here. Hey, man, I appreciate that. Thank you. And hopefully I said your name correctly there. If not, if you can spell it out phonetically, I'll usually remember it pretty well. I don't like to disrespect people and say their names wrong if I have a choice. But guys, really, this channel, I know we give charts and we take looks at things, and sometimes we're right and sometimes we're wrong. But I hope what you get from this more than anything else is the general trading advice, the general trading axioms, and the things that you may have heard before, but you haven't applied properly. You don't really understand, or things that maybe you haven't heard before, or things that you're not aware of that you're doing. The idea here is to get you more in tune with who you are, because by doing that, then your trading, can take on a life of its own, that you can help direct it. If you don't understand who you are or what you're doing wrong or the pitfalls to watch out for as you're starting out trading, you're going to get all caught up into it. Next thing you know, you're going to be out. And wouldn't that be awful? Wouldn't that be awful especially if you're in crypto and you get into Bitcoin and you don't do the things you need to do, and so you're out right before it takes off? I mean, that'd be awful, wouldn't it? That's what we're trying to do. We're trying to make you understand the importance of risk management. Let me see here. Orange Man, what's up? He said the UK found a new variant of Corona too. Zombies incoming. I think we've all been waiting for that down here in Texas. So, we got a lot of guns down here. A lot of open land. I'm not sure the cows will be too happy, though. Can I speak some more about contingencies for an overconfident market? What exactly are you looking for? Yeah, maybe I can address that. Sure. Let me know exactly what you're looking for there. But anyway, hey guys, listen, if you haven't joined us yet, be sure you do. howtotradetowin.com. We'd love to have you there. And listen, if you have not been a member with us before, here's a code. You can get 50% off your first month of Tier 3 access with us, okay? So you can get a half price right now using that code Tier 3, 50% off first month. Just write it down as it looks there. Go to where it says join us, and when you get to your checkout page, it'll right there at the top, it'll ask you if you've got a coupon. Click that, type that in, and join us, man. We'd love to have you there. Got a ton of stuff, guys. Like I said, we do our we've got over 20 assets that we track on a daily and intraday basis. Well over 50 setups usually on average a week for Tier 3. We've got probably what amounts to at least about 40 hours of educational video content right now. You get your weekly Tier 3 educational stream where you get to learn a new tip or a trick or a technique that you can use immediately in trading, no matter how experienced you are or are not. If you're a brand new trader, we've got a special room just for you, a special discussion room just for you. When you join, just send a DM to Adam. He'll probably contact you when you first join anyway. And you just let him know, hey, listen, man, I'm a really new trader. I don't really know what I'm doing. I'm kind of uncomfortable, asking questions out in front of everybody else. And then if you do that, you'll only be asking questions in front of those who are also brand new traders. So no reason to feel nervous or shy or anything like that. Again, guys, we're doing everything we can to kind of help you understand what it means to trade. A lot of people think what it means to trade is to just get on there, look at the chart, and try to find some projection, but it's so much more. That is the least important thing of what you do, guys. The most important thing comes to understanding yourself. It comes to understanding the psychology of the market. It comes to understanding emotions and how they play. And why when somebody tells you, oh, everybody's bearish, so I'm bullish, or oh, everybody's bullish, so I'm bearish. They just blindly throw that out there without really understanding what that means and how to use it appropriately. So a lot of stuff there, okay? I'm not sure if it's case sensitive. I think it probably is, Hank. The password, the code there. So that's why I say just copy it the way it is, guys, if you want to use it and jump it in there. And it's only available for those who haven't been a member yet. So you can kind of dip your toes in there and see what we're doing there in Tier 3. And just see that I'm not kidding when I say we produce more content that you can probably absorb every week. So it's good stuff. Anyway, we'd absolutely love to have you there. Again, we have other tiers as well, but that code works for that right now. By the way, that is a limited number of those codes we're going to have there. There's a limited number before the code is no longer valid. So make sure you jump in it before anybody else does, all right? All right, guys, here we go. Let's look at what's going on here. By the way, I'm releasing something next month. So you guys should be pretty excited about that. Even though you have no clue what I'm talking about, be excited. Just be paying attention to me, all right? Follow me on Twitter, TX West Capital. Follow me here, YouTube, Twitch, all that fun stuff. Jump in Discord with us, and you'll find out about it when we do it. Good stuff. Anyway, so what's going on here? Well, I've got a couple accounts here. Coming through the weekend, we had talked about this. This is a 4-hour and even a 1 hour here, bullish divergence here. And so we talked about that going up and where to look to kind of get confirmation that it's going to be longer lived, all that. So we got all that. We moved up here. We've got a possible double bottom here playing out. So right here. And so the target on that, the pattern target, is right up here at 19,737, all right? Now, the purple counts suggest that this is a 1, this is a 2, which means that this is a 1 and this is a 2. And I think it's likely to reverse right around this pivot area here. Right around 18,730 or so to 18,800 kind of area. Well, that's where we get the reversal. And if we do, then we've got a minimum wave 3 target up here of the R3 pivot at 21,734. All right? However, if you guys have been paying any attention, you may have noticed there is a slew of supply sitting right around 20,000. Now, 20,000, psychologically, as human beings, we tend to gravitate toward numbers that are round in tens. So, if you guys were here during 2017 and 18, you'll know that 10,000 was a very significant, even going into 2019, was a very significant level. 20,000 is that same thing here. And that's why you see all that supply there, even though it's just above the all-time high. So there is this possibility that we've got a slightly less bullish count here. And this starts off, instead of this being a 1 up here, this gives us this count in red, which gives us a 1, 2, 3, 4, and I'm sorry, 3, 4 over here. So 1, 2, 3, and then A, B, C down here is a 4, rather than this 2 right here. And in this case, you'll notice that if it's correct, 4 does not drop below 1. So it's valid. It follows all the rules, all the functions, everything else. And with that, you could probably actually, you know what? You could probably use either one. You could use the purple or the red count going down here for this right here. The one thing I'm going to say is, right now, if this purple is the one it's doing, we're using this kind of this purple count, right? But again, you could also use the red there. I think either way you can do it. What I'm trying to say, though, is the purple count, this WXY, is usually a wave 4, not a wave 2. But in either case, we've got this red count, which isn't WXY. It's just an ABC as well. So there's no real, definitely this way or that way kind of idea on this. There's just two possibilities right now as we're playing out. But if it is this red count, then what we have here is a 1, 2, 3, 4, and we're working on 5 here. And if we're working on 5, then it looks like we've got maybe a 1, 2, 3, 4, and we'll have a 5. Why? Because this area right here from what would be this wave 2 to this wave 3 up here has a 38.2 right above the pivot. And 38.2 is usually what you look for a wave 4, 18,821. So we can do an A and then a B is a triangle here. So A, B, C, D, E. And you get a C down here toward this. And guess what? If we do that, the minimum wave 5 target would be 61.8, which is 19,790 here, which completes the pattern target for the double bottom. However, we could see it overextend just enough, just pop up, maybe like a final pop-up right above the R1 pivot there. Maybe even reach as high as the 78.6 here, which is 20,053. And kind of hit this wall of supply up here. And that could be it. Again, it all depends on this count coming up here. I'm not saying that's definitely what's going to happen, but I'm saying if you're not aware of that possibility, then you're not trading correctly right now. Because my thought is, if we're hitting this up here, we're going to have a pretty strong, probably $1,000 drop off that, at least. Because what will happen is, you'll have a flood of buying as you get to that all-time high and right above it. And there'll be huge supply just sitting there, and they'll just be buying into that supply. And that supply is going to, potentially absorb all that and then send it down. And there's been so much buying all in this area here. Everybody's been going long, all in these areas here. All this overlap. That a sudden sharp drop down immediately, especially for those up here at the top, puts them underwater immediately. It traps them up there at the top. And so as price starts falling fast, they're going to try and jump out and try and cover or end up getting liquidated. Either way, whether you're covering or you're getting liquidated, it's adding more supply pressure to price, which pushes it further down, which hits more of those orders and pushes it down. So just something to think about. Don't assume because where we are right now that we absolutely have to go skyrocket from here. I'm not saying it's not going to happen. I'm saying it's possible, but you have to fully be aware of that 19,000 to 20,500 kind of area. Almost 19.5 to 20.5. That range in that area there. Because just structurally, you can see this as, your buying climax, automatic reaction, ST, up thrust here, comes back, and then you push up here to an up thrust after distribution, and then it comes down. So potentially, again, I'm just trying to keep you guys aware of what's possible. Doesn't mean you have to change going long or going short or anything like that at this time. It just means that as we get there, you need to pay attention. Right now, if we look at the crypto quant chart here, again, the same one we continue to look at, which is the inflow to the spot exchanges. As I've continued to show you guys for the last, month and a half now, every time we get above 2 here, it leads to $1,000+ drop. So we did it right here, did it again. See right there, all these times before over here, and so here we are rising again right now. So just keep an eye on that. If you've got access to Crypto Quant there, just keep an eye on that. I'll keep bringing it up, talking to you about it because it's been reliable every time. The idea being once it gets above 2.0, that's usually where there's going to be a drop. So the last thing you want to do is get caught with these drops, right? So just be sure that you're watching that. Right now, as far as the TPO chart goes, I talked a lot about this support resistance level. I said you needed an impulsive move above it, which we got. As you can see, the market is just not interested in this range here, this area of, really just not, God dog it. Get the set back up. There we go. This area of about, almost about 18.6 to 18.7. Again, single print all the way up, hit the previous point of control, went sideways with that. That's where we closed. Opened the next day, yesterday's candle here. Small initial balance range. No drop below the bottom means we're going to move up, and we did. We're starting to get more sideways here now. And then look at where we're going today. So then we closed below the point of control there. And then today, we've got a lot of sideways. So more and more sideways. See how we're getting more sideways here? So acceptance of a price level right now, point of control just a bit higher. So in the small initial balance range here, so I could see us, definitely pushing up higher, within this candle or going into the next candle potentially. It's definitely setting up for it here. Right now you've got pretty much about, I don't know, it's 50-50, but it's leaning just slightly more toward bid side here on the books. Well, right now, here we go. There's a big one. Just jumped to 64.35 there, as you can see, kind of moving up a bit there. So overall, looking for potentially a bit further on the pullback and then a move up. But that could be it. As we were looking at over here, it could very well be it. So you come in sideways between the pivot, the R1, you jump down, drop down, you check the R1, the pivot as support, basically, bounce right above it here, move up, spike just above the R1, and then crash back down. That would be what I would expect to happen if this red count idea is going to play out. So we'll see. We'll see. Again, guys, I don't know why I feel like I need to keep saying this. I do. Yeah, I do, because I get comments like you guys wouldn't believe. Pay attention to what I'm saying, guys. I'm not saying that's definitely going to happen, but I am saying that it is something I'm watching at the moment. So, yeah. Let me see here. Hank says sell walls starting at 19.4. Yeah, exactly. You've got a lot of supply sitting in this area, and then it really kicks in around that 20. So, when you think in terms of market movement, you have to have enough demand to actually eat through all that supply. But you kind of want to lean toward the supply side around these numbers like 20,000. And it doesn't mean that price isn't going to go above it, but when we think about human psychology and where people tend to gravitate toward, that 20,000 becomes an area that could offer a significant point of reversal. All right? And so that's what you guys just want to be careful of when you're doing that. By saying that, by taking that position, it does not mean that you definitely think the price is going to reverse there, but it means you're watching. So that way, if something does happen in that area, you're paying attention. You're ready for it before it does. And so that way you can get out without being surprised. That's the goal. Let me see here. Let me see here. Sorry, man. YouTube TV canal there. Yeah, I don't talk about alts today. We usually do that on Fridays. Mondays and Wednesdays we usually talk about Bitcoin and or the dollar potentially. Usually we don't talk about alts though. A little bit shorter show. So, but Fridays we do. And Fridays we'll take requests and check out a few things if people want us to look at things as well. So, this is kind of where we're sitting here, guys. I'll tell you what, I was all about, when this kind of popped up above this swing here, I was all about this, this much higher moves up. And then as I was looking at the chart, it just hit me that we have this big move here, this up and down, and then we have this decline and up right at that same level. It doesn't interact. And often when I see that, the first thing I start looking at is a 3, is a 1, 2, and a 3, 4. So you get that movement between the 4 and the 1 there. And so that's what brought up this red count. I went ahead and looked back through it, and the waves all fit. They all do what they need to do. But this would have to end if this red count is to be correct. One way you guys can look for it is that if you make it down here toward this area to get the bounce, down toward the pivot, the 38.2 on that retracement there, then what you're looking for is 3 waves up and then a reversal back. So what you're going to want to look for is something like this. You want to go A, B, C, and then you want to see it drop back below B here. That's what you want to see. If you get a 1, 2, 3 and it drops back below that, that should close it off, and that would, kind of seem to fit in with what's going on here. But as long as you've got this still going on, as long as you've still got a 1, 2, 3, 4, and it doesn't get below here and starts going up again, then you start looking for 5. And if you're looking for 5, then that would kind of knock out the idea. Because here's the thing, guys. if we've got ABC here for 1 and ABC here for 3, 5 has to be an ABC. It's an ending diagonal. All waves have to be ABCs. 1, 2, 3, 4, and 5. They all have to be ABCs. So you can't have 5 here and still say this is ABC and this is ABC. So if you've got a clear 5 over here that's not an ABC, 1, 2, 3 up like that, then we would have to look back at this count here a little bit differently, but we still get basically a 1 here and a 2 here then. And again, that leads you then to your 3 up here toward that R3 pivot. So it's all about just watching what's going on here. Nobody said trading around the all-time high was going to be easy. If you thought that, you were wrong. There's a lot of people coming in on both sides of it, guys, okay? There's a lot on the other side of it. You're going to have, and there's going to be people, remember, we often talk about the difference between retail traders and, and the pros, right? But the reality of it is, guys, in general, that's the way it is. The way we talk about it, where the pros are selling resistance and retail's buying resistance, and the pros are buying support and retail's selling support. But even within the pros, you can have them on both sides. You can have them buying resistance or selling support as well. Because, you're going to have, it doesn't mean because everybody that's a pro is doing the same thing. It's just that the greatest percentage of them are. But even if that, it doesn't always mean it's coming at the exact same level. You could have pros thinking, okay, this is going to pull back, and some thinking, okay, it's going to bounce here, and others looking for it to bounce down here. If it drops down below that pivot, well, I guess below this swing low right here at 18,628.10, I'd be looking potentially, I'd be looking at the 70.5. I always look at the 70.5. But I'd be looking down here. Well, that's not even the right one. Let me see here. There we go. If this is 1 and this is coming back, this 2 would be a short 2. It's only a 38.2, which would give us a strong 3. But if it goes down below that, for me, you can look at the 61.8 here, but I'd probably be looking at the S1 pivot. So you can have pros that are looking to buy here on a bounce, whether they think this is a 4 or a 2, or they think it's a 2 down here. So they don't all think the same thing at the same time. When we make these distinctions between the retail traders and pros, we talk about more general overall activities with them. Okay? Again, we've talked about it before. I used to speak about it more because everybody used to talk a lot more about whales, right? Here in crypto. And what I tried to get across at the time was just having a lot of money doesn't make you a successful trader. Because if the market is very bullish, is really bullish, you can dump a ton of supply on the market and the market will absorb that. It may drop back, it may pull back a little bit, but it's going to absorb that and continue higher. The pros know this. If you are just somebody who has a lot of money and you don't really know what you're doing, you're just trying to toss money in there like that, you're going to lose all your money. Again, guys, just because somebody has a lot of money doesn't mean they necessarily know what they're doing. But pros in general, they have enough money. And then, of course, they have the experience and the education and whatnot to be able to use what money they have effectively to kind of nudge the market around a little bit. When we say, again, guys, many times you guys talk about, what's the term? You guys talk about manipulation. But when you talk about manipulation, you talk about it as if somebody can go in there and say, you know what, when this hits 19.5, I'm going to sell all this in there, and I'm going to send price down to 17.5, and then I'm going to buy it all up and send it back up. And that isn't the way it works, okay? What it is it's a lot of shifting. It's a lot of nudging, all right? Think of the market as price as a very heavy object. And the best that the pros can do is to nudge it. Now, if they nudge it at a more at an inflection point, if they nudge it at a pivot, it's going to give it more movement. All right? So that's possible. But you guys, I don't want you to think that there's manipulation as in somebody can get in there and go, well, man, I'm going to make the market turn right here. I'm going to make it turn right back here. It's not really that. It's a lot more nudging around and then letting the market take over toward areas that are understood to be more demand-centric. Or if you're pushing it up to areas that are, known to be more supply centric based on previous activity. Usually a lot of the way it goes. Hey there, Telltale. Good to see you. Let me see here. I know you prefer to trade the chart rather than guessing the direction. Do you think any chance to see below 14 anytime soon? Oh, I think there's definitely a chance. Now soon, soon depends on what your what your definition of soon is. Are we gonna see it tomorrow or next week? I don't think so. 14K in the next month, possible. It just depends, guys. It just depends on what's really going on up here right now, and what the result from that is. How if the goal here is to turn this down around that 20,000 area, how much of the market does it catch offsides? Because the more the market it catches offside, the easier it moves down. Initially. And so you get a strong move down followed by a strong reaction, reactionary bounce, and then, it falls sometimes just as fast, but sometimes a little bit slower. But all that plays into it. Let me see here. Hank says truncated fifth into supply and failing miserably. Oh, man. Well, I'm just not such a truncated fifth person, but, I've always said, I can't say truncated fifths don't happen, but most of the time what I've noticed is they just give people a reason not to look for a better answer. I don't know. I avoid truncated fifth labels as much as possible, personally. But, something like that, yeah, I mean, again, there's heavy supply in this area. And you have to be aware of that. You can't just bullishly say, oh, it's going up. It may go up, and it's okay to be long and think it's going to. But it's not okay if you're a trader and you're serious about making money to think that way without understanding what could possibly go wrong with what you're thinking. All right? You absolutely, if you want to be a trader for any length of time, you have to understand what could go wrong every time you go into a trade and where that would happen and what that would mean. And that means you have to think, guys. You have to put some effort into it. And if you're newer, it's a lot more difficult. So if you're newer, you should zoom out to a larger time frame and just kind of play these larger levels. Because the smaller your time frame goes, the more up and down overlap you're going to have, what we call noise. And that's going to toss you out of a lot more trades than anything else. Let me see here. Let's see. What do I think about a two-time top at the weekly RSI? Let me see what you're talking about here. Let's see. Oh, so you're talking about this kind of... Yeah, definitely a possibility. Sure. If you're looking at patterns... you could definitely see a possible double top here. Sure. Now, my only problem with that is a double top as a pattern has a pattern target, right? You have to excuse me. Got some Gatorade here, guys. Keep my throat wet. Here's the problem. If this is a double top, then this basically 3,200 to 20,000, so 17,000 below the point of breakdown becomes the target. And so that takes you to a negative number. So if I look at this and go, do I think it's a double top in terms of the double top pattern? No. Because again, that pattern target based on the height of the pattern would take us well below zero. So I don't really look at that. Hank avoids EW as much as possible. Let me see here. There is bearish divergence. Let me see here. Depending on how you look at this. If you look from this point over here, from the all-time high in 2017 to our recent all-time high, you got lower highs, as you can see here, and you do have higher highs here. Now, my only real caution about using that whole area as a divergence is this huge bit of advance here in the middle. Usually when you're looking at divergence, you don't want to see a huge interruption in the middle. Because most often what this means is you're looking from this high to this high, and then from this high to this high. And in which case, there are no divergences there. Because you got a lower high, lower high there, lower high here, and then you've got a higher high and a higher high here. So that would be my only real caution about looking at this whole thing as a divergence here. But nonetheless, we are up pretty high with RSI. But again, in a bullish market, you can see that happens. It does happen. Let me see here. But yeah, in order for this to be a double top, guys, again, the whole idea of the pattern is it has to break down below this swing low. Anything prior to that is a possible double top. It wouldn't be a double top until you broke down below that. But like I said, I don't think as far as patterns go, that would be a double top pattern just because, again, that pattern target sets you well below negative 2,000. Negative 0 there. How do you measure the pivot point tool? If you're talking about this right here, just go up to the up here to indicators and strategies, and then you click on that, and then you can type in pivots. And I use pivot point standard. That's what I use. And those are these pivots right here. And so they'll update to whatever time frame you're on. So your daily pivots are different from your weekly pivots, which are different from your 1 and 4 hour pivots, which are different from your 15-minute pivots. Yeah. So your daily pivots last a month. Your 1 and 4 hour and whatnot pivots last a week. Your 15-minute pivots last a day. They reset it, at the end of those time periods. The next ones. Monthly, I'm interested to see how the monthly ends. We are almost halfway through the month right now. So last month was definitely bullish. We closed up above that swing high there. So that swing high was 1966. And we closed here at 19,700. So we closed above that, which is, generally a bullish thing. Nice large candle. What we want to see now is what happens with this monthly. You can notice right here that it bounced right here at this previous resistance. So this right here, look at that line across. So you had the high there, the low there. And that's what you want to see. If this month closes down into this area, things start to get a bit more interesting. If something were to happen in the next few weeks and this monthly were to close down and engulf this previous monthly, so close down below 13,799 and 44 cents. If I were you, I would definitely not be thinking about higher highs anytime soon. So, the monthly still has a lot to play out. And don't forget, guys, the monthly is printing, which may or may not turn out to be anything, but it's printing a TD9 right now. And you can say that we are at resistance at the R2 pivot, at the all-time high. This is a resistance area. Even though we're a bit above it, the candle is still within it. So we're printing a TD9 on the monthly at all-time high resistance area. So, again, I'm definitely interested to see how this monthly turns out. But, right now we're only 2 weeks into it. So this is not a bullish hammer. This would be called a hanging man here. This right here. Yeah, it's a hammer if it's at the bottom like this. It's called a hanging man if it's at the top there. And generally, you consider it a reversal, but like with any other, or a potential reversal, because it's coming at the top. Just like you consider it down here as a possible reversal because it's at the bottom. But you have to have, the next candle needs to be another supply candle, another nice supply candle to kind of confirm this reversal. Otherwise, it's just a pause. But generally, if you see this at the top, you should be cautious. If this was to print here at the end of the month, you should be cautious. Because it's a pause at least, but potentially a reversal heading lower. Let me see here. Let's see here. Yeah, I kind of like that, Hank, a little bit. A little bit much of a wick at the top there. But yeah, kind of this idea here. You had this here, and then you had this bullish candle versus a supply candle here. You had a demand candle. So it went up, so it was just a pause, basically. But this was a 2-month pause, really. Kind of a decline here. You went from a high of 12.5 down to a low of 9,900. So, you did have a bit of a decline over 2 months. But this ended up being more of a reversal to head back the other way after coming down from the top. This one happens to be at the top. So, we'll see what happens with it. Again, it's only 2 weeks in, guys. We've still got half the candle time to go. So this could print anything by the end of the month. Just be aware of that, all right? Yeah, exactly, Hank. It always needs confirmation. And that's a good point, guys. If you're new to trading, you've no doubt come across online all the various reversal candlestick patterns and everything. But remember, they're not reversal candlestick patterns. They're pauses, potential reversals. Everybody refers to them as reversals, but not one of them is a guaranteed reversal. They're all guaranteed pauses. Now, it matters what happens on that next candle, next two candles. Does price continue higher or does price continue lower? And that's where you get your confirmation about what's potentially happening there. So again, if we get, let's say the month ends like this, and then January we have a demand candle, something like this or something, then this was just a pause. However, if we have this and in January we get, something like this or something, where you've got, supply side candle coming down, then it means that more likely than not, you're going to be a reversal off this area because you're getting confirmation of this potential reversal. You pause, and then you went the other way. So always keep that in mind. I guess that's just one of the things that bothers me the most online, with all the information that's freely out there, is so much, I've warned against this. So much of it isn't always completely wrong, but it sounds right enough. It's right enough just to make you believe it. And then there's areas of wrongness within it. And the problem is if you're a new trader, you don't know that. And you get caught thinking, oh, this particular candle is a reversal and this particular candle is a reversal. But you don't understand that, no, they need confirmations. Kind of like what I just explained there. So, yeah. Make sure you guys are always paying attention with that. Let's see here. Let's jump into 15 minutes, see where we're at here. Yeah, we're just kind of going sideways here. Again, the idea being that if I'm looking at the 15-minute here, God dog it. I mean, it looks like it's just an ABC down here. What's this swing low? This swing low right here is 18,979 and 21 cents. 18,979 and 21 cents. So you can get a 1, 2, 3, 4, 5. So there's A. And then you get A. Let's see here. Let me see. There's B. 19,038.50. 19,038.39. Okay. So you get A, B, C. And you work on a D and then an E to get your triangle here. So A, triangle is a B. And then C down is what I'm thinking we might be having going on here at the moment. I guess the other possibility may be an A, B, C down, A, B, C up. So A, B as a flat correction. And then we've got a 1. I used to be over here. Well, it'd be a 1 here. It'd be 1, 2, 3, 4, 5. So 1. And then another flat right here. So A, B, 1, 2, 3, 4, 5. C here. So yeah, so you could get an A down, a B up, and then 1, 2, 3, 4, 5 coming down. That'd be the other way to count it. But either way, it gets down there toward that pivot, I think. Let's see here. If we do this. If we've got that as a 1, 2, look at that. Yeah, just right below that area there. 18.7 is a full out wave 2 where we'd be looking for. Or, I guess a wave C is what I could say. Because, whether it's 4 or 2. Wave C comes right into this whole area here. This whole same kind of target area. Oh, it didn't show up there. Come on. Just gonna try. I just want to pull this to the other time frame, so you can kind of see where this is coming out there. There we go. So if we jump over, there we go. So again, potentially, you'd have this 1, 2, 3 down here at 18,821, 4 back up to around, the swing low here at 19,000, and then 5 down here potentially at 18,710 or so, right around the pivot. Now, if I'm looking at this, you guys that may have followed me for a while, I've got my own way of doing supply and demand structures. And so I would generally be looking at this right here as my demand structure. And as you can notice, the EQ, which is where we usually look for price to target, is right there around that pivot, right there around that. So again, I think, basically A, B, and we've got a C coming down here. No matter how you look, whether you look at it as a triangle, whether you look at it as a flat or something like that, I think you've got this target down here in this area. And so then it just depends on what happens as it comes out of there and it reaches that 19,900 to 20,000 area. Do we get, the rejection there? Or does it just power on through it and continue up higher toward, this R3 pivot up here around 21,737? That's kind of where we're at, guys. So do you notice that with either count, you don't have to be confused because in both counts, they're looking to come to the same area and then push off, and then you're just long and you just watch to see. Do you get rejected strongly up here or not? If you don't and it continues up higher, then you're looking up higher, at least there. If it does, though, then you're really eyeballing that red count and you're thinking about, oh gosh, I got to go the other way. So here's the best thing about that. Let's say we get the bounce here at the pivot and it takes off. And so you jump in it down here, right? Let's say you jump in it right here around 18.9. And it makes its way up here. Well, guess what? If it gets rejected, it's coming back. You've got a lot of room, a lot of time potentially to make your decision, depending on how fast it comes down. But you've got a lot of room there. And so worst case scenario is you were going long hoping it was going up here, but you were aware that it could reverse here, and then it reverses here, and then you've got room to get out, so you don't make any money on this move here. But now with the strong rejection, you know that you're likely got many thousands of dollars to move down. And so you're well positioned for your move down, to get in and deal with that. So, again, guys, it's all about in understanding where your validation, invalidation levels are, things like that, and what your possibilities are. And from that, you can derive a trading plan. That's what you should be doing. Now, let me see here. Yeah, exactly. Again, guys, the hardest thing to do is to trade this junk right here. A lot of you guys, you'll make money on this right here. This is easy money right here, right? This is I don't care how new you are. This is easy money. And then you'll turn around and you'll lose it all and more right here. Because you don't understand the possibilities. So, sideways chop, it'll chop you up. It'll take care of you. But right here, safest bet is to wait for a move above 20,000. Watch price as it gets up there. See how it does. Is it giving you signs that it's really going to be explosive and break out and head up? Or is it looking weak? Now, neither way is going to guarantee that you're going to be right about which way price is going, but at least it gives you a base point from where you're going to go. Guys, at the end of the day, you're looking for basically a break above 20,000 on impulse, an impulsive break above 20,000, or you're looking for a decline below 16.2 here. That's your real kind of range area there. Now, along the way, you can look for a breakdown here at 17.6 basically. 17.550, 17.6 area. You get a breakdown below that, that opens up, but a breakdown below that only opens up a possibility to the swing low here. You have to break that swing low to open up the lower possibilities. So if you think about it, trading really is nothing more than your levels, your horizontal levels as you're moving. Watch those swing highs and swing lows, whatever time frame you're on. If you're in here on the 15-minute, first of all, if you're a new trader and you're trading 15 minutes, stop. You're just going to lose money doing that. But if you're trading this here, your range becomes this swing high up here at 19,416 and your swing low down here at 18,979. Now, as price continues to consolidate, you can take those lower highs, so right here at 19,335, and higher lows right here at 19,038, and that becomes an interior range. So your range is really this thing right here, locally. Now within that, you've got an interior range right here. And if this is a triangle, then you'll probably have one more interior range, something like this here. But all these ranges do is tell you the breakout to the next range. So a break above here then has you watching this. If you can break out of this, then it has you watching this up here. Same thing to the downside. You break below, you can look at this. You break below, you can look at this. You break below, and then you look down lower. But ultimately, your range is this big thing here. And for a lot of new traders, they don't like that because it means they have to wait a little bit. And new traders are notoriously impatient. But that's what the market uses against you. It uses that impatience. Remember, if you are retail, you are liquidity. Period. All right? The other time frame traders, your pros, they use you to move the market. They use your liquidity, your orders to move the market. By catching you, by buying your stops, by buying your longs and your shorts. Yeah, they're using your liquidity, you as liquidity, to move the market. So stop being impatient. Stop thinking you have to be in the market all the time. Stop thinking that, that you have to trade every single day. Some days just aren't worth trading, guys. I don't know how many times I can say that. Some days just really aren't worth trading. And you'll save so much more money in the long run if you don't trade them. But you've got to get that into your head. Otherwise, you'll continue to trade them anyway. And most of the time, you'll lose money. Let's see here. Let me kind of catch up with you guys. Tell you Ryder said, this is where you learn to code API trading bot and paper trade it, I guess. Let's see here. Data says, even above 20K, I would be careful in case it's a violent 3 going through. I'd expect the 4 down and would like to see the retest on 20 to head up for 5. Possible. Where do you put your stop loss when you want a long on the 4-5 red? Well, I mean, what I would look for before longing this is to see if we get down toward this. This is Bitstamp. See if we get down toward this 18,717 level here and get a reversal out of that. If we can get a reversal out, I'd go ahead and long it. And then I'd just put my, for me, I'd put my my stop loss under this swing low right here. Under this 18,628 here. Now that doesn't mean you couldn't come on down here to the 50% and turn around and go up. You could. But if you're playing a wave 4, I mean, that's what you're doing. You're putting your stop loss below that swing low a bit there. The idea being that if you get down here and you go up and you're dropping down below it, that it should potentially go lower. But again, because it's a wave 4, it may only get to the 50%, which is a valid wave 4 target. So if you're worried about that, then you'd put your stop loss below that 18,487 area. But it also depends on how you play it. There's different techniques that we teach in Tier 3. We taught one last week that everybody's absolutely going bananas about. They're loving it. And that one right there gives you your stop loss based on that particular technique. We've taught 2 more in the last 2 weeks prior to that they absolutely love as well. Where they have their own stop losses derived from the technique. But just as a basic, what you're doing here, that's kind of how I would look at it. Really, in Elliott Wave, if you're doing a wave 4, basically wave 4 pullback is valid up to wave 1. So this could all be valid. So, I mean, if you're doing it based on Elliott Wave, without looking at a nearby swing low or anything, you're looking to put your stop loss below the wave 1 termination point here. Because wave 4, even though we generally look for it to bounce to 38.2, and sometimes it gets to the 50%, it can still be a valid wave 4 as long as it doesn't retract below wave 1. Except in some cases, again, like, diagonals and stuff. Which, this is an ending diagonal. So wave 4 could literally come all the way to this count here, this red count. Not the purple count, but the red count is a, ending diagonal. Which means, wave 4 could actually pull back below wave 1. So there's a lot to know depending on what technique you're using to do it. But if this is a double bottom here, and we haven't hit that target yet, I would expect us to remain above this, this point here where we validated the double bottom. So 18,654. I would expect us to stay above that. It shouldn't drop down below into that to go back up to hit the target. Once you're above this validation level, as you can see, it just dipped down right to it, just right into that wick, and right back out. Should be good to go toward the target. Let's see here. Let me see here. LXT, take care, man. Hey, what's going on, Block Tech? Good to see you checking in. Let's see. Let's see. Yeah, guys, as Hank's pointing out there, there's always another trade. If you are a trader, if you want to be a trader, stop worrying about this. Stop worrying about getting in here and getting out there. Stop worrying about that. Worry about locking in profit and moving on to the next one. Lock it in profit, moving on to the next one. Understand that there's always another trade. As a trader, if you are getting overly emotional, whether it's bullish or bearish, whether you're getting depressive or really just out of your mind excited and euphoric, either way, they're negatives. It's bad for your trading. Trading should be seen as something you do, as something that's just done. Okay? Best way to understand, you should be creating a system for yourself with rules on which to trade. And you follow those rules. And if you follow those rules, you do not take emotion into account. You don't worry if you're euphoric or if you're depressive. You follow your rules. You get through it. You do it exactly as your rules state. When you start bending your rules, that's when you start losing a lot of money. There's always another trade. It's a job, guys. Trading is a job. You go in, you do your work, go home. Just like you would do in any other job. Try not to be feeling that euphoricness when you make a good trade or that depressiveness if you make a bad trade. You have to absolutely get beyond that. It's not easy. It's not easy. It's difficult. And it's nothing that you can learn to do at some point and then never have to worry about it again. We're human beings. Part of what makes us human beings is this emotion that we have. And so you'll never be just like completely devoid of it. You'll still have to deal with it, even 25 years in. So, yeah. Onyx King says, if trading is not boring, you are doing it wrong. There you go. There you go. Unconscious competence. Hey, interesting. Okay, yeah. What's going on, Sean? Let me see here. So anyway, I got to get out of here, guys. Don't forget, jump on over there at howtotradetowin.com. We'd absolutely love to have you there. If you've never been with us before, there's a code for you. You can get in for half price your first month of Tier 3. Check us out. See if you like it. Like I said, we produce more content than you can probably handle in a month, honestly. Even if you're a professional, somebody who's been trading a long time. We have a lot of content that we put out. But check it out. See how you like it, man. We'd love to have you there. It's not me, guys. It's really the people that we've got there. The members that we have are just absolutely amazing. And I think part of that is because they stay with us so long. How many other places do you know where people are staying 6 to 12 months and longer? Continuing to stay there. We've got members that have been with us since day one, guys. We've been in business now 3 years and 3 months now. September of 2017 was when we started. And we've still got people from way back then that are still members with us. And I think the fact that people have been with us for so long and they've gotten to know each other, I think it just makes it just an awesome, friendly community. Always helpful. Everybody always wants to explain, wants to help you understand why they're thinking what they're thinking. It's a great way to kind of transfer ideas back and forth, get other eyes on ideas you may be looking at, things you may be thinking. So, yeah, definitely. Prison, people stay there longer? Well, we're definitely not prison. We are not Hotel California. You can come, but you can never leave, right? Now, you can leave whenever you want, but people choose to stay with us, so it always works out. By the way, guys, one more thing real quick. This morning, Peter Brandt posted something, and I went ahead and retweeted it here. But a lot of times, when I talk about my macro views, I can always tell who the new traders are. I can always tell who the inexperienced amateur traders are, because they'll talk as if I'm wrong when things haven't even finished playing out yet. They say things like, oh, but you said Bitcoin was going to go to so-and-so price. Well, first of all, I've never said that. If you follow me, there are no guarantees in trading. I give ideas and possibilities. And so they'll say that. And other things they'll say is, oh, you've been bearish for so long. You're on the wrong side. Whatever. Guys, come on. Let's get real. We're trading as the market moves. Your macro ideas shouldn't keep you from trading along the way, because your macro idea may or may not play out. But as Peter Brandt says here, he says, as I often have said, an opinion is not a position, and a position is not an opinion. In other words, even though I have an opinion that price may be potentially a lot less bullish than what people think, for reasons I've explained, it doesn't mean that I immediately go over and start selling everything right now and shorting right now. You absolutely have to look for confirmation of what you're talking about. And when you're talking about large macro ideas, that takes time. It takes time to play out. You guys may have heard that price can stay irrational longer than you can be in the market, right? That's true. So we talk about our macro ideas. We watch how things are going. We suggest, we look at possibilities as it's building. But until you get confirmation that a thing is a thing, it's still only a possible thing. All right? And I just want you guys to really understand that and hopefully kind of take that to heart, so you're not looking like the fool out there like these other people, and approaching, others in that manner, that says, hey, listen, I'm clearly don't know what I'm doing as a trader. I'm clearly new. I don't know much, but I'm going to sit out here and make a big noise of it so everybody knows I'm that way. I don't want you guys doing that. Lose your egos online. It's really the problem with social media is that it makes people want to be boastful. And the problem is, if you get to that point where you're doing that, it makes it hard to change your mind. But trading is all about fluidity. It's all about being fluid. It's all about changing your mind when you need to. When the market gives you information that says something different. Okay? So, there we go. So anyway, I think that's it, guys. That's going to be good. I hope you guys have a great day. You trade safe out there. We would love to absolutely have you with us over there at Texas West Capital. So please check us out at howtotradetowin.com. Take advantage of that coupon if you've not been with us before. And God, that said, man, happy Hanukkah to those of you that celebrate. Almost a Merry Christmas to the rest of y'all that celebrate. And happy holidays to everybody else. Listen, guys, remember this. At the end of the day, if somebody says something to you, if they say Merry Christmas and you don't believe in Christmas, that's fine. But understand that they are trying to bring joy your way, trying to bring kindness your way. And I think people get way too hung up on being upset that somebody said Happy Hanukkah to them and they don't celebrate that. Or somebody said Merry Christmas to them and they don't celebrate that. Everybody has to wash it down with Happy Holidays. Guys, just be appreciative that somebody wanted to say something joyful to you, wanted to shed some good words with you, share some good words with you, shed some light your way. I think if we spend more time accepting it for what it is rather than worried about they're trying to push something onto you, I think, we all end up being a lot happier, a lot more mellow. And the good thing about that is, guys, it helps you with your trading. It really does, all right? So there you go, guys. You have a great week. We'll be back on Wednesday at 11 a.m. Central Standard Time. Teo, I would never speak ill of you, my friend. Never. You've given me no reason to. But that's it, guys. Listen, thanks a lot for joining in. You have a fantastic next couple of days here. And remember, at the end of the day, the only thing you control in the market is how much you lose. That's it. That risk management is where you make your money, guys. So make sure you spend more time on that than anything else, all right? Take care, everybody.